Well, it's great to be here. In many ways, the United States is one of the world's oldest democracies. But when it comes to democratization of capital, the United States is really a very, very young nation. It was 1985 when the first woman in the history of the United States became the CEO of one of the largest companies in America. It took till 1985 till the United States was ready to accept a woman as the CEO of one of the 1,000 largest companies in our country. In 1989, the United States of America passed legislation which made it illegal for pension funds and other organizations and insurance companies and state pension funds to invest and buy the debt of any company headed by an African American, an Hispanic, and except for one case, a woman. That was 1989 in America. So democratization of capital is really a new idea for one of the world's oldest democracies. And today I hope to address really three areas with you quickly. What is the democratization of capital? How's the world changing? And challenges for urban investments. With democratization of financial institutions and assets leads to democratization of industrial assets, which leads to career opportunities. The United States of America is a unique country in many ways, not the least of which is the democratization of our financial assets. And the strength of our economy over the past 15 to 16 years was due to the fact that we were not dependent on a few financial institutions, i.e. banks, to finance our economy. And as you can see here, it's no surprise that the difficulties in Asia began in Thailand, where 450%, 4.5 times the entire assets of their markets lied in just their 5 banks. As those 5 banks' financial condition weakened, therefore the economy of Thailand was shut down. In the United States today, our banking system plays a small role in the financing of our country and less than 20% of the assets. The last 30 years, as most of you in the audience know, have seen an explosion of the creation of financial institutions. There are more mutual funds today than stocks listed on the New York Stock Exchange, and the amount of money invested in these mutual funds far exceeds the amount of money today in our commercial banks. So if you wanted to save $1 million in Japan and you assume you're going to get 0 rate of return on your money, you'd have to save $25,000 for 40 years to have $1 million. And in the United States, if you thought you were going to get 12% on your money, you'd only have to put away $1,300 per year or make a one-time investment of $10,700 to know that you'll have $1 million in your savings account. So the perception of this rate of return is what drives society. Corporations in America made very, very few contributions to their pension plans over the past 10 to 12 years due to 2 factors. 1, high rates of return, and 2, increasing their rate of actuarial assumption. So our country has a lot of opportunities if we would open our eyes. Low-income market opportunities. People that make less than $30,000 in America spend $850 billion a year in consumer spending. They would be one of the 10 largest countries in the world based on their economy if you only did business with individuals in our country whose total income was less than $30,000.